But let's come back home to West Africa, where Ghana's central bank yesterday announced that its policy rate would remain unchanged at 14.5%. That comes at the end of the monetary policy meeting by the financial regulator. Let's drill into that a bit further as we're joined now from Accra by EDEM KPORKU, who is a research analyst at APAKAN Securities. Good to see you, my friend.
Hi, good evening.
Good evening. Thank you so much. How has the Ghanaian economy and the markets reacted to this interest rate policy decision yesterday, especially since 2020 started, the various decisions taken so far?
Well, the transmission mechanism from policy rate changes to interest rates has somehow improved significantly since 2018, when the Bank of Ghana introduced the Ghana reference rate, which was to replace the base rate computation. Now, the Ghana reference rate has brought to bear more market-determined variables, which has now become a benchmark for price and credit. Now, the policy rate is also a significant contributor to the Ghana reference rate, as well as the interbank lending rate and the 91-day treasury bill. Now, declines in the reference rate will see a decline in bank lending rates, holding bank risk premiums constant. Now, we see that there has been a faster response to interest rate changes this year so far. After a 150 basis points cut in interest rates in March this year, we've seen that it has reflected in about a 220 points decline in average lending rates across board in Ghana. So in essence, this shows that there's a sharp response to lending rates on the market with respect to the policy rate.
So what about fiscal policies that's supposed to go and complement what the central bank is doing, ensuring that you have stability of the key macroeconomic parameters? Is that happening from the government side and from the central bank side?
Yeah, well, I'll say that fiscal policy has been very supportive, especially in this time. You would say that the central bank is a funding agent, while the government is a spending agent. So if the central bank can make liquidity available, it's up to government to pass that liquidity through the system. Now, if the central bank has used the channel of the banking system, banks being as risk averse as they are, would rather just buy treasury securities instead of approving more risky loans into their portfolios, especially in this pandemic period. On the fiscal side, government has increased spending significantly, which has been very supportive for fiscal policy. Government has increased spending to individuals in terms of social protection and protection of livelihood. The government has also been able to provide about 600 million Ghana cedis in soft credit to MSMEs and about 2 billion Ghana cedis credit guarantee to larger corporates, so as to induce banks to extend credit to these larger businesses.
So you think this 14.5% was a good decision and will stimulate the market and the economy, at least until the next monetary policy meeting later in the year, around November?
Well, absolutely. In situations like this, I think that the best action to take is to take no action at all. If you take a look at inflation and where the numbers are, the Bank of Ghana is expecting that we should be in double-digit inflation at least till the second quarter of 2021 before we return to its medium-term target band of 6 to 10%. Also, when you look at the data, you realize that core inflation has been above headline inflation for some time, which is pointing to the fact that there may be some underlying inflationary pressures that cannot be overlooked. Also, there are fiscal risks where government is experiencing a very huge financing gap. As of July, the fiscal deficit was about 7.4% against its revised target of 7.2%, its revised target in a mid-year budget. So combining this fiscal concerns with the inflationary concerns, you say that there's really no room for a rate cut. But then again, there are some growth concerns that should in a normal sense, you say that there are growth concerns. So ordinarily, the central bank should tighten monetary policy. But then again, if you weigh and you weigh the balance between the two, it appears that the best decision as of now is to just maintain interest rates.
Okay. Thank you so much for your time this evening, EDEM Nicholas, KPORKU research analyst at APAKAN Securities in Accra, Ghana.